more earnings season, scandals are a lesson in leverage, and oops, I did it again. Welcome to the Unlimited Supply Podcast, your daily music business TLDR in your ear, powered by a tornado of queeners and rods, and brought to you by No Disc, helping music technology and finance companies navigate the music industry in partnership with Digital Music News. It's May 1st, 2026. I'm Lars Murray, dancing around the figurative maypole. It's another Finance Friday, but before we dive into the shallow money trench, over at Digital Music News, Ashley King reported yesterday on a study that compared streaming activity across 3 different scandals. The scandals in question were Morgan Wallen, Diddy, and R. Kelly. The study found that streaming activity across the 3 varied significantly, but it wasn't because one of them was worse than another. Well, that's actually kind of hard to judge. But regardless of how people felt about the guilt of the parties in question, what the study found was that the defining factor in whether their streaming activity went up or down had less to do with the scandal itself than it did with how the platform treated the music, which should surprise no one. R. Kelly was taken out of curation and playlists, and his streams went down. Of course they did. Morgan Wallen didn't get the same treatment, and so his streams didn't go down. That's probably not news to anybody, but it did underline something we discussed the other day, which was the alleged obsolescence of labels. We have noted many times that labels have relationships and leverage with the platforms. These scandals provide a lesson in that leverage. The very fact of that leverage and relationships is what gives label-affiliated artists a leg up on the true indies. When the fruits of that leverage go away, well, so do the streams. Same truth, just a funny way to show it. I have no idea whether various bad boy affiliated labels fought harder for Diddy than RCA did for R. Kelly, or if Universal lobbied harder for Morgan Wallen. That's not really the point. The point is that they could, and that it matters, and that's what you're getting when you sign to a major, whether the deal is a good one or a bad one. All right, let's dive into the shallow money trench where thieves and pimps run free. Everybody these days, it seems, is jumping into the independent artist finance business. First, it was Sound Royalties, then it was Beat Bread and our partner Roy-Fi and Duetti and Pipeline. Now Symphonic has entered the chat, so to speak. Unlimited Supply axe grinder and Symphonic CEO Jorge Brea announced that Symphonic would now be offering financing to its independent artists through a new initiative run by his partnerships and strategy head, Michelle Garramone. It's never bad for indie artists to have more financing options, so congrats to Symphonic for making more capital available. All of this, though, comes with a caveat. Read that fine print, people. No matter who you're dealing with, the less fine print, the better off you probably are going to be. And the fewer strings attached, the better as well. Everybody, it seems, is jumping into the catalog business, and the distributor Symphonic has entered the chat. Symphonic, which to date has been a provider of services to independent artists, and by most accounts is a pretty good one, is now diving into the catalog acquisition business. Everybody in the money pool, or should we say, money trench. The initiative was announced by Unlimited Supply axe grinder Symphonic CEO Jorge Brea and will be run by his partnerships and strategy head Michelle Garramone, who joined the company recently. From a corporate standpoint, catalog acquisition makes a lot of sense. After all, if you've got a big pool of data to tap into to make your decisions and those aforementioned relationships and leverage, you can certainly use those things to enhance activity around your catalog. What it also does, though, is put your distributor into competition with you. This is not new. Labels have been doing distribution deals since the dawn of time. Sometimes they work extremely well, but it does mark a bit of a change for a services company like Symphonic to become an IP owner. Distribution services is a tough business, and if anyone is capable of keeping things in balance between owned and distributed assets, it probably is Symphonic. But it does mark a significant change for the company. Never a dull moment in distribution. And if I sound like I was repeating myself there, I was. I couldn't resist shouting out Jorge Brea as an Unlimited Supply axe grinder. Oops, I did it again. Jumping out of the money trench for a second, over at another one of those companies that both owns IP and does independent distribution, Believe CEO Denis Ladegaillerie announced that its distribution arm, TuneCore, the OG indie distribution company, would be blocking content generated on unlicensed AI platforms, which is basically shorthand for Suno, which to date is unlicensed by the majors or Believe. Ladegaillerie dropped another interesting nugget, opining that he didn't think that Suno would actually get licensed by the majors. which is an interesting and bold statement. It's hard to believe that the two sides could hold out forever against each other, as long licensing battles seldom benefit either party. Believe is far from anti-AI, though. It does have deals with 11 Labs and with Udio. It's just drawn a line in the sand. Meanwhile, a hat tip to Suno. Their Paul Sinclair pointed out the other day on LinkedIn that Suno is now the number 11 overall downloaded app in the Apple Store. That's a lot of downloads, which means there's a lot of interest from consumers in Suno. How long that interest lasts is yet to be determined. After all, Sora was pretty high up in the charts last October, and now it's completely gone. But I expect with the all-star team of execs Suno has assembled, they're going to be around for a while. All right, back into the money trench. Earnings season is in full swing. Hybe reported its Q1 earnings. They've been waiting a long time for the members of their flagship group BTS to come back from military service and come back with a vengeance. They did on March 20 when Arirang came out and topped the charts for 3 straight weeks. But it's probably going to take another quarter for that BTS shot of adrenaline to fully hit the Hybe system. As Dylan Smith points out at Digital Music News, a big K-pop release like this is pretty capital intensive, even if the payoffs are also large, which is one reason Hybe's revenues were in the red overall in Q1 and adjusted revenues were only slightly in the black. The red ink came from the either generous or tactical or both grant of shares to Hybe employees as bonuses by Hybe chairman and CEO Bang Si-hook. Generous, yes, it's always heartwarming when the big guys share the wealth. Tactical, perhaps. Bang is under a lot of legal scrutiny over alleged shenanigans surrounding Hybe's IPO, and spreading assets around this way may be a good way to protect them from the grasping hands of the government. And the latest DSP to announce their earnings this week is Deezer. DSP revenue is a complex business. It's possible to have a downish quarter and be positioned for long-term success, just as it's possible to have a uppish quarter and watch your stock tank, which is what happened to Spotify this quarter. For its part, Deezer revenue was down year over year in the first quarter by a few ticks, but what was up was its average revenue per user. The ARPU was up 11%. The reason for all of this is that Deezer is heavily partnered with telecom companies, which drive a lot of subscriptions, but have lower ARPU than direct subscribers. So it's possible to have an overall decline in subscribers and an overall gain in direct subscribers, and that is more profitable. More direct subscribers equals more ARPU. Regardless of any of this, it took Deezer a very long time to be profitable, and the good news for Deezer is that it still is. And Primary Wave, which is probably the leading candidate for the Unlimited Supply Finance Friday Company of the Year at this point. That doesn't exist yet, but maybe I'll make it up. Primary Wave did not sit on its laurels, having acquired Cobalt in April. Nope, Primary Wave just kept moving, announcing another 2.2 Queener fund. That's $2.2 billion for rights acquisitions. According to Murray Stassen over at Music Business Worldwide, the fund, which is Primary Wave's 4th fund now, was originally targeted to raise 1.5 Queeners, or $1.5 billion, with a hard cap of 2 Queeners. But that hard cap proved not so hard, and it ended up oversubscribed at 2.2. With capital flowing into the music industry from institutional investors like this, pretty soon we're going to have to remove the word shallow from our money trench catchphrase. And that's about it for Finance Friday. And on a fun note to close the week, I just wanted to point your attention to something very close to home that was kind of cool. We've often said that Olivia Rodrigo is the official pop diva of dad rock. And she struck again this week as she showed up unannounced on stage at an open mic at Pete's Candy Store in Brooklyn. That's just pretty cool. And now I can say I've played on the same stage as Olivia Rodrigo. Support for Unlimited Supply comes from you, our listeners, and now we have Unlimited Supply swag for you. If you support us with a year-long subscription, you will get the Unlimited Supply Merit Badge Black Auto Trucker Cap. It's on sale in our store, bundled with that premium membership. For one reasonable price, you will have the satisfaction of supporting Unlimited Supply. You will receive a shout-out as a supporter in the show, like Mark Cates this week and Tom Briggs last week. And you will also receive a limited edition Unlimited Supply Trucker Cap. To get your hands on one of these bad boys, just head over to the Unlimited Supply shop. We also have Unlimited Supply Merit Badges on their own, or you can just buy me a cup of coffee. If you like what you hear, please hit that follow button wherever you get your pods. I live for your praise and encouragement in person, but it helps a lot more if you drop us a rating and or a review in Apple Podcasts, YouTube, or Spotify, and tell a friend or three, preferably 21 times, because according to marketing whiz Susie Schultz, it now takes not 5 but 21 times for anything to sink in. Links, including links to support us, are in the show notes, but you can also visit unlimitedsupplypod.com to sign up for our newsletter, to tell us what you think about the show, to suggest feature ideas, to feed us info, to feed us lunch, to call us out on our dubious assertions, and to tell us what we're missing out on. In the words of the great philosopher and birthday boy, Eduardo Rivadavia, don't let your short-term greed get in the way of your long-term greed, and remember, in this business, no conflict means no interest.